Well, welcome back. The IPO market is piping hot for major AI companies. Anthropic filed for its IPO earlier this week with a valuation of nearly $1 trillion. The Claude AI maker on pace to go public this fall, expected to bring in some $50 billion in annual revenue. Anthropic expanding its Mythos model to an additional 150 organizations across 15 countries. OpenAI planning its IPO this year. And CEO Sam Altman reportedly headed to Washington today for talks after President Trump's executive order. President Trump signed a new AI safety executive order yesterday. And, of course, we've got SpaceX likely going public next week. Joining me now is ARK Invest CEO Cathie Wood. Cathie, great to see you. Thank you so much for being here.
Thank you, Maria. I'm very happy to be here. Thank you for inviting me.
And of course, I've been talking about you this morning, saying that you stuck by Tesla for so many years and always said the reasons for the strength in the company and your belief in Elon Musk. Now, when you see SpaceX about to come to market, what's your take on these AI IPOs coming to market now?
Well, I do think that finally we're seeing the private market really unlock and some of these amazing opportunities moving into the public markets. We've been in actually 6 stocks that could go public in our ARKVX, our venture fund. And so I think it's a great thing. I think SEC Commissioner Paul Atkins, who's been trying to encourage this unlock and deregulate to speed it along, I think that's part of what's going on here. And I do think these opportunities are so massive that they need to move into the public markets to scale, especially SpaceX.
Yeah. So tell me about those 6 companies that you invested in that could go public this year.
Well, SpaceX is at the top of the list. It's 11% of our fund, and it got there because SpaceX acquired XAI, so we had owned that. And then OpenAI and Anthropic as well. I think they are indicating they'll go public, and possibly Databricks. So, you know, this AI revolution is, I think, the private markets have dominated, with the exception of chips and data centers in the public markets. The private markets have dominated with these frontier models, and we need to get them public.
That is just incredible. You are about to see an amazing payday with all of these companies, Cathie. And SpaceX, according to reports, is planning to set the IPO at $135 a share. They'll sell 555.6 million shares. The rocket company aiming for a $1.8 trillion valuation, and will likely trade on the NASDAQ as well as NASDAQ Texas. What's your sense of those terms?
Well, we've been modeling SpaceX for years. In fact, we have an open source model. What it doesn't include, however, is the orbital data center opportunity. We're still working on that model. We think, though, that the reusable rockets have driven down launch costs to unlock the Starlink opportunity, which, of course, is global communications, global internet. It's a very big idea. And now, on top of this, we have orbital data centers, which honestly, until about 9 months ago, we didn't have that in our model. And I think Elon Musk, basically out of frustration with terrestrial data centers, all of the red tape, all of the not in my backyard, all of the fears of electricity costs going up, he basically was thinking first principles, as always, how do I solve this problem? And he said, of course, this is an opportunity for another business for SpaceX, orbital data centers, which could dwarf the Starlink opportunity. Again, we're doing our modeling now, and every time I look at it, it seems to be getting more promising, shall I say, in terms of upside.
No, this is just incredible. I mean, it's viewed as really a valuable piece of the U.S. broadband toolkit used. I'm talking about Starlink, used by government, likely to continue supporting that. And its lead in launching rockets is a big competitive advantage. But the worry is valuation. Morningstar this morning out with a report saying that it's worth half of what it's saying. They're valuing the company at $780 billion, Cathie. So how do you think that you arrive at a $1.8 trillion valuation for SpaceX? How do you get there?
How do you get there? Well, it's a platform company, global communications. It could ultimately compete with all of the telcos out there as longer term. Starlink goes direct to consumer. So that's a very big idea. Telecommunications is one of the most important sectors out there. And then this orbital data center opportunity is really the heart and soul of the AI revolution. That is a very big idea. And I think for those who have who think this deal is overpriced, I would refer them to the ChatGPT moment, which really became the aha moment for a lot of people. There is a demand shock taking place. The demand for AI seems to be insatiable because of how much productivity it is unlocking.
Yeah.
Yes. So I think anyone not doing research to the level, and credit to Brett Winton and Sam Corris, Tasha Keeney, Daniel McGuire, they have been working on this model with our AI team now because of orbital data centers. So thank you, Frank and Joseph. You have to have a team working on this model to really understand how big the opportunity is.
Well, I agree. I mean, this is an enormous opportunity when you look at the impact of AI across our economy. But I want to get your take on the critics who are worried about valuation. I mean, we just had Ryan Payne on in our Word on Wall Street segment, and he mentioned that these companies are not even profitable. Here's what he just said. Watch this.
We keep talking about this big IPO, these three big IPOs that are going to come out, SpaceX, Anthropic, OpenAI. Collectively last year, they lost $25 billion.
Wow.
Yes. So I think, everyone's talking about, well, the dot-com era, these companies didn't make any money. Well, guess what? The three biggest players right now, arguably in AI, don't make any money. So I do think you have to be cautious here. I think this.
Now, Cathie, I know we said that a long time about Amazon, and Amazon was focused on revenue the whole time, and ultimately it came through. But how do you answer the critics who are talking about these are money-losing companies right now, and they've got sky-high valuations?
Yes, this is the difference between short-term investment time horizons and longer-term investment time horizons. Venture capital has longer-term investment time horizon and wants companies to invest aggressively now, forego short-term profitability to capitalize on these massive opportunities. And just to give you a sense, SpaceX with Starlink turned profitable, then it bought XAI, so that is why, and by the way, the profitability that we see spewing out of Starlink is going to be astonishing. And SpaceX has a 10-year lead on any other company. It was the first company to launch and relaunch a reusable rocket 10 years ago, 2015. Blue Origin is the second one. That was last year. I think it was last November, I think. And it has been unable to relaunch successfully a rocket. And that's the key here. So we are very focused on companies developing a moat, which SpaceX and OpenAI and Anthropic all have those massive moats. They're investing aggressively now because they are going to deliver on operating profit models that are software-like, shall I say.
And Cathie, your latest venture fund, ARC-VX, which you mentioned, crossing the $1 billion mark in AUM. Congrats on that. It's just been 4 or under 4 years since its inception. What do you want to say about that? You argue AI investments is causing a shift in CapEx spending, saying productivity gains can prove more powerful than tariffs and inflation pressures. Tell us more.
Yes. Well, we are very proud that we have scaled, and this was really direct to consumer. Anyone could buy it, $500 minimum, but anyone can buy this fund and get access to some of the most important companies that are creating this technology revolution. And yes, productivity gains, we think, right now they're at about 3% on a year-over-year basis. We believe that thanks largely to AI, robotics, blockchain technology, other breakthroughs, even in healthcare, multi-omics technology, the productivity gains are going to continue to accelerate and drive real GDP growth to much higher levels than most people expect. But the very important byproduct here is productivity is the most potent anti-inflationary force out there. We learned this during the 90s. And I think we're going to see a downside surprise in inflation when oil prices crack, and hopefully that's imminently.
So you do agree that once we get out of this conflict, oil prices will come barreling down, which is what, of course, President Trump and Secretary Bessent agree. Cathie, is there anything about this revolutionary period that we're in right now that resembles the dot-com bubble-like mentality? Is there anything that you see? We were both there. We watched dot-com take over in terms of, energy and concentration and money. Are we in a similar period, or is this much bigger?
This is much bigger. Now, the dot-com boom and bust happened because many people were willing to dream the dream about the internet and where the world was going. And they were absolutely right, but they discounted it way too soon. Just to give you a sense, there was a lot of CapEx on fiber to make that revolution happen. But it went dark because the technologies weren't ready and the costs were too high. Too much capital chasing too few opportunities too soon. Today, what is the variable we're watching to compare to fiber? It's GPUs. And GPUs are in great shortage period here. There's been a demand shock, and supply is rushing to meet it. This is real demand with real revenue growth behind it. The profitability will follow.
Wow, that is incredible. And you're right. I mean, they're in demand, and they are seeing prices skyrocket. The hyperscalers buying all the memory, and that is certainly putting a situation for pricing there in a much higher place. Cathie, it's always a pleasure to talk with you. Please come back soon. We'll be watching your work.
Oh, thank you so much, Maria.
All right, Cathie Wood joining us. Stay with us. We'll be right back.